Hi, you are welcome to our channel. Today we want to shift our attention to two-column cash book. And the transaction that you have on your screen is a transaction that usually worries students when it comes to recording it in the two-column cash book, because students knows that in double entry, or every accounting student knows that in double entry, every transaction affects two accounts, basically an account that is taking the debits and then an account that is taking the credits. But over here we have a transaction that reads cash sales banked, which means that there are three different accounts here: cash accounts, sales accounts, and then bank accounts. So how is the recording going to be done? Am I going to record in all these three transactions, or if I'm going to record in two, which two accounts are going to be used for this transaction? So that is the purpose of today's video. So just join me as I take you through how to record this transaction in two-column cash book as accounting students. Now, as the transaction reads, cash sales banked. So we have to record this transaction in steps, because there's first part of the transaction and there's a second part of the transaction. The first part of the transaction is that there was a cash sales. We sold for cash for an amount of 40,000. That is what happened at the early stage of the transaction. So we have sold for cash, and we all know that the cash account is an asset account and all assets have debit balance. So anytime there is an increase to an asset account, that asset account will be what? Debited. So if we have received cash and then this basic double entry principle, debit what comes in and credit what goes out. Now cash is coming in. So between the cash and then the sales account, it is cash that is coming in. And so the cash account will be debited. So that is the first stage of the transaction between cash and then sales. So we are debiting cash accounts in the name of sales, which is 40,000. And then we credit the sales accounts in the name of cash, because double entry, for every credit entry, there should be a corresponding debit entry. So that is for the first part, the transaction. 40,000 being cash sales. Now, if the transaction ended here, cash sales, this would have been the end of the recording. So cash and then sales. Now, another thing happened after this recording. From here, the cash was taken to the bank. So they took the cash right from the cash account into the bank account. So it's like the bank account is serving as an intermediary here. It received the cash and later gave it out. So let's use the basic double entry principle that we know, the debits the receiver, credit the giver. Now over here is between cash and bank. Now cash account is now given to bank accounts, and bank account is also an asset account. As we said earlier, any increase in asset account will be what? Debited, and decrease will be credited. So since cash is also asset account, now that we are taking into the bank account, it means that cash account will reduce, right? So cash will be credited in the name of bank because it is going into the bank account, 40,000. And then bank receives it in the name of cash, 40,000. So this is the complete recording. Now let's see what is happening here. When you look into the sales account, you could see that when we balance all these accounts, we are going to have a credit balance of 40,000, because there will be a balance carry forward of 40,000 at the debit side, which will be brought forward to the credit side of 40,000. When it comes to the bank account too, there will be a debit balance of 40,000 when we balance off this account. And at this stage, I know all of you know how to balance off an account. So when the balance of this bank account, there will be a debit balance of 40,000. When the balance of the sales account, there will be a credit balance of 40,000. But when the balance of the cash account, it will be zero. Zero because the debit side is equal to the credit side. So there's no balance carried down to be brought forward, either to the debit or the credit side, because the account has balance by itself. The debit is equal to the credit. And for this reason, it will not make accounting sense for you to record this transaction in the cash account because the cash will be zero at the end of the day. So because of this, whenever you have cash sales banked, it's between the cash accounts, the bank accounts, and then the sales accounts. So bank accounts and sales account, because these are the two accounts that we have something in at the end of the day. But the cash accounts, which is in the middle, will be zero because, as I said, it serves as a conduit in this transaction. It just received the money and later gave it out. So it will turn out to be nil at the end of the day. So cash sales bank is between the sales accounts and then the bank accounts. So since it's between sales and bank, over here it will be bank. You record it in the name of bank, and over here too to be in the name of sales, because the cash will cancel out, and once it is cancelling out, it will not be used in the recording. So anytime you have this transaction between your sales accounts and your bank accounts. So this is how to record cash sales banked. Thank you for watching. And if you have not subscribed to our channel, I urge you to subscribe so that anytime we produce these educative videos, you'll be the first person to receive it. Watch it to improve your knowledge in accounting as you aspire to become an accountant. So keep watching, keep subscribing, and also keep sharing the video to your colleagues who may also need to enrich their accounting knowledge. Thank you for watching. Bye.